knowing the big picture and kind of zooming out gives you a much better chance of placing your bets.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome, everybody, to another episode of Talking Trades. And of course, you have Kevin Wadsworth and myself, Patrick Karim. And this is going to be a big one for you guys today. Kevin will talk to you about paradigm shifts. And this is critical. I know you guys, you might have heard us talk about this, but for your long-term investment profile, this is key concepts to understand. So I'll just stop talking and I'll let Kevin do what he does best and showcase this important concept.
Yeah, what does a paradigm shift actually mean? I suppose we need to define that. I mean, in simple terms, a shift from one paradigm to another in terms of technical analysis and trading and investing is really just one way of saying that you're moving from one particular environment to another, and there's a very clear difference between those two environments. Maybe it's a highly inflationary environment to a deflationary environment. It could be a particular phase during the economic cycle when a certain set of conditions that once applied no longer applies. Now, a lot of the time, particularly with day trading, and if you're a scalper, you might be down into the weeds of the daily, the hourly, and even the minute charts, and not really looking up to see what is going on in terms of the big picture. That's really important to know what's going on in terms of the big picture, because that is going to massively affect not just the big picture, but the weekly, the daily, the hourly charts. It's going to change the way they behave, and it's going to change your chances of succeeding in your trading and investing. Okay, let's as always, it's always good to pull up some charts and put something visual up there for you so you can see what it is I'm talking about. So this is gold in US dollars on the log scale. I think what I want to point out here is the importance of that red line. I said that when we cross the red line, we would be entering a new paradigm, and it's a sort of transition from one era to another, not just based on this one chart, but based on a bunch of sort of weight of evidence. So as the chart was breaking out through this red line, quite a lot of other things happening at the same sort of time to suggest that we are entering a new paradigm for the precious metals. And if we're entering a new paradigm for the precious metals, then we're by extension entering a new paradigm for many other markets. Okay, so if we go back to the silver chart, you can see that the price of silver hasn't yet done what gold has done and confirmed a new paradigm by breaking out of this multi-decade cup and handle pattern. And all this is just one massive period of price action that has built out a technical chart pattern that gives us a very strong clue as to what is coming next. Cup and handle patterns are very powerful technical chart patterns, and they usually form on daily, weekly, or over the course of a few months. What I mean by that is that I do think that the price of silver is going to break out through that red line, just as it did for the price of gold, based on the evidence that is behind these charts. And some of the evidence from these charts comes from, for example, gold versus the S&P. And if we put gold over the S&P, so I'll just do that for you now, over SPX, what we're looking for is some kind of evidence that we are indeed entering a new paradigm. Okay, so what does this chart tell you? Well, it shows a series of paradigms, if you like, a series of major shifts in the economic backdrop. When the chart's going down, it means that the S&P is outperforming gold. And when the chart is going up, it means gold is outperforming the S&P. So you have one particular paradigm here up until about 1970, where you can see the stock market is massively outperforming gold. Then you enter a new paradigm when the chart breaks out, and you have a 10-year period where gold massively outperforms the stock market. Then the chart breaks down again, and you have another multi-decade period or a couple of decades at least, where the stock market massively outperforms gold. Now, if you cast your minds back to the early 2000s, this ratio broke out again through the moving average, through the resistance lines, through the Ichimoku cloud. We entered a period of 10 years where gold and silver and commodities, oil, energy, they outperform the stock market. So what's happened since then is we've had a pullback, stock market outperforming gold, and now we're on the cusp of a new paradigm. And in fact, if I zoom right in, if we were to close the month at this sort of level, then that would be a pretty clear breakout. Of course, we're not going to call it a breakout yet because we haven't got to the end of the month. But if and when this ratio chart breaks out, it's signaling a paradigm shift. Paradigm shift when you move from one era to another. You're moving from the era where stock markets were outperforming gold to an era where gold is outperforming stock markets. And one sort of final example of a paradigm shift, and that's this chart here, which is the US government 10-year yield. So it's the yield the US government pays on its 10-year dated debt. Now, you can see on the left-hand side of the chart during the 1930s and the 1940s that the 10-year yield was falling and it was contained below what I've labeled as the pain line here. When we broke out above that, the economy experienced a lot of pain, a lot of problems, shall we say, with inflation, with industrial strife, bad times for people generally, and caused primarily by a high inflationary environment. Debt to GDP was dropping, which effectively allowed this situation to get to where it did, with interest rates up around 15-16%. 10-year yield was up around 16%. But that was made possible because the debt to GDP was falling to 31%. So you've got two paradigms there, one where the 10-year yield is falling, one where the 10-year yield is rising. We then had a 40-year paradigm where the 10-year yield was falling and it was contained between a support zone and yet another line that I've labeled there as the pain line. And because debt to GDP was rising from 31% to 120, 130%, it meant that mathematically speaking, the yield on that debt had to fall, because if it didn't, the ability of the United States to service its debt would be called into question. Now, what's happened is during COVID, we had a false breakdown here and a rapid upside reversal, which we spoke about at the time and said that that meant it was likely to break to the upside, which it has done. The 10-year yield is now over 4%, and it's been hovering around this level for a number of years, around about 2 or 3 years. We are now in a new paradigm. We've broken out from that 40-year trend, and we're in a new paradigm. And as I've said on this label here, you have to ask yourself which assets outperformed the last time we broke above the pain line. So which assets outperformed through the 1960s, 70s, up to 1980? Well, of course, gold, silver, energy, oil, commodities. So knowing what paradigm you're in, Pat, knowing the backdrop to the economic environment that we're in, knowing the big picture and kind of zooming out gives you a much better chance of placing your bets on the right numbers on the roulette wheel of trading and investing, because you're aware of the general trend and the general direction in which things are highly likely to resolve over time. So I hope that putting those pieces of evidence together is going to provide something or prove helpful for people watching this.
I'm sure it will. This is huge, man. Nobody's looking at these charts from the previous cycles like you showed back in the 40, 50 years ago, and they're critical because these cycles do repeat. And if we're going to cycle into one of those new those new paradigm shift eras, then look, people got to be aware of that. That's the macro landscape. Guys, again, thank you for watching. Make sure to subscribe, like Talking Trades, and everything we do there to get great content like this. See you next time.